Here are the 5 core financial impacts that you need to be aware of given the recent conflict outbreak in the Middle East. So the first thing is around oil and gas prices. So as you can imagine, oil and gas prices have spiked up massively, jumping around 9% since the strikes began on Saturday. So it's not just the supply disruptions to oil and natural gas in the region, but it's also the supply chain disruptions. So for example, 20 to 25% of the world's oil does flow through the Strait of Hormuz, which has been completely closed off as a result of these strikes. Then it's currency markets. So the dollar has seen quite a weakening over the last few months and year, really reaching a 4-year low point just last month. But the dollar has always been seen as quite a safe haven currency, and so many investors have been flocking to the dollar, meaning that that has also spiked up in value. Now on the flip side, you've also got other currencies from countries like Britain and also the EU who don't export oil and natural gas, seeing a depreciation in their currency as demand weakens, where investors then put their money from pounds and euros, for example, into the US dollar. Now, gold has also seen a massive spike in its value, jumping from $5,100 per ounce to $5,300 per ounce in one single trading session, as again, investors like to flock to commodities such as gold, which are seen as a safe haven in times of trouble like this. Then if we also look at stock markets, they have taken quite a big downturn, as again, investors tend to take their money out of stocks which are typically seen as more risky and more volatile in these kind of situations. And so for example, we've seen the FTSE drop around 2.6% in just one day of trading since these strikes. And then also some of the Asian stock markets have been hit even further. So for example, the South Korean stock market is down around 7% in that time frame as well. Then the final thing is around inflation and interest rates. Now, this is more of a longer term. Then the final impact, which is more of a longer term impact, is inflation and interest rates. So for example, a 10% increase in the global price of oil can cause inflation to rise by about 0.1 to 0.3% almost immediately. And so if oil prices do stay elevated, then we could see inflation spike up as well, which could in turn cause interest rates to also increase to try and combat this higher inflation.